97 points higher on the Nifty. Very strong opening.
For our own markets, we're holding up in the green right now as we speak. We have the Nifty sitting with cuts of 43 points at the day's low.
0.25%, 18,159 on the index. The market is going to go home with not quite a three-digit gain, but quite close as well. 95 points higher, 18,214. Banks, of course, were the sort of big reason why that happened.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track the 6 hours of the trading action in just 5 top headlines. I'm Nigel D'Souza. Here are the headlines for the day. Sensex and the Nifty hit the highest levels in 10 months as bulls maintain their winning momentum. Banking stocks lead the charge, and the Nifty Bank index closes at record highs. PSU banks report a strong second quarter. Profits grow 50%, loan growth is over 19%. Asset quality also improves, with gross non-performing assets declining by nearly 16%. Britannia posts strong revenues and record market share, but tightened guards for slimmer margins, while Marico reports tighter margins and a weak growth outlook. Bitter pill for Divi's Labs after it fell 8% on a weaker than expected second quarter. Escorts as well lower as it disappoints. They saw a huge drop in margins and some loss in market share. Soda ash prices revised downwards for the first time in 18 months. Tata Chemicals as well as GHCL end mix. TVS Motors ends flat. Some brokerages bet on the stock while others downgraded. Well, here's what we have lined up on the show for you. It's a packed show as always. In Market Voices, we have Dheeraj Agarwal of Ambit Capital. And in Big Corporate Voices, we have Dinesh Kumar Khara, the chairman of SBI, and Saugata Gupta, MD and CEO at Marico. Well, let's start off with the day's market action. The Sensex and the Nifty hit its highest levels we've seen in 10 months as earnings season draws to a close. The banking stocks, they led the rally with the Nifty banking index ending at a record high. Prashant Nair is with us to run us through the market trap. Prashant?
Almost a replica of what we saw in trade on Friday. The market started higher, sold off, was flat for most parts of the day, and then it came alive exactly at 2:30 when there was a big push higher. It was led by banks. And let me explain. So Bank Nifty was doing the better of the two indices for most parts of the day, but it was largely led by public sector banks, which have been doing well. Private banks, not so much. But starting 2:30, I mean, you had private banks which also came into the mix. And I mean, both these combined doing a lot to help the Bank Nifty and the Nifty as well. Both Nifty and Bank Nifty are not very far away from their respective all-time highs, by the way. It was all about results in the Nifty, large caps or outside as well. What did well, like Britannia, SBI, Bank of Baroda, some of the largest gainers, these were on the back of earnings beats. The two biggest disappointments, losers today, were also earnings-led. Divi's Laboratories and Marico is what I'm talking about. I mean, outside of the PSU names like SBI and Bank of Baroda, there was a whole list of those. Bank of India, Union Bank, Canara Bank, to name a few. Rail infrastructure stocks is a theme we'd highlighted earlier. RVNL, RailTel, IRCON, IRFC, their entire gamut continuing to do very well. And of course, the leader there has been RVNL. In the broader markets, Amara Raja for the second straight day running, NIIT, IRB, there was JK Lakshmi, which did very well. Supreme Industries is coming out of a bit of a slumber. GE Shipping and many more names participating very strongly. Market breadth was positive. There were losers as well, but most of them were earnings-related disappointments. Up ahead, as I said, the markets are not very far away from all-time highs. Tomorrow is a market holiday, but there are U.S. midterm elections in the U.S., which I think we'll watch closely. But the big important cue from a sort of market perspective in terms of data really is the consumer price inflation number for October out of the U.S., which is only on Thursday. Will we get to new highs before that, or will we have to wait for that? That is something which we will have to wait and watch. Back to you.
Well, that's right, Prashant. All-time highs, that's something that the bulls are eagerly looking forward to. Well, here's some expert opinion then. Dheeraj Agarwal, co-head equities of Ambit Capital, said that India is doing relatively better in comparison to the other markets. He also said that they had a target of around 18,700 on the Nifty. Let's listen up.
We've had a target of 18,700 on the market. Although that target was for September 23, looks like it'll come much faster. I think we are in a situation at this point of time where good news is good news for us and bad news is also good news for us, because relatively speaking, India is doing better. So at this point of time, looks like the trajectory is up. I don't think one should keep increasing targets just because the markets have run up, right? That's like chasing momentum. I mean, it can go a little bit higher, who knows? It's difficult to catch the exact points. Broadly speaking, I personally call this period of time as the convergence, the period of convergence for stocks within a sector and across sectors, which was a period of dispersion between 2014 to 20. So 2014 to 20, the strong kept on going up, the weak kept on getting bashed. At this point of time, we are seeing the strong, if it is very expensive, is actually flatlining or declining a little bit. And what was weak between 15 to 21, but they're showing some amount of earnings traction, is climbing up. So it's more like convergence.
Well, moving to the second headline now. The PSU Banking Index, well, it surged in today's trading session on the back of a strong set of numbers that have come in the second quarter. The index was up 4.5%, and stocks like SBI as well as Bank of Baroda, they rallied anything between 3 to around 10%. These stocks, well, they saw profits growth of close to around 50%, with loan growth coming in at over 19%. In fact, their asset quality also improved, with the gross NPAs or non-performing assets declining nearly around 16%.
Well, Q2 FY23 has been an operationally strong quarter for the PSU banks. The loan growth has been pretty robust at above 19% YOY and about close to 5% sequentially, which means that they have gained market share both YOY and quarter on quarter. So the operating profit growth is very healthy at 18% YOY and about 32.1% sequentially, largely led by the fact, net interest margin has expanded for majority of these PSU banks on a sequential basis, and the trading losses that they had in Q1 has actually reversed for many of them. So PAT is up about 50.4% YOY and about 65.7% sequentially. While the operating profits are healthy, the declining credit costs have actually helped the earnings momentum for PSU banks. So the return on advances that I've calculated is at about 1.35%, up from 0.85% in the previous quarter and up from 1.07% in the same quarter last year. In absolute value, their gross NPA is down 15.9% YOY and about 13% sequentially, and their net NPA is down about 29.3% YOY and 13% sequentially. So calculation does show that the gross NPA ratio is now at 6.5% when compared to 7.5% in the previous quarter, and the net NPA ratio is at 1.65% when compared to around 2% in the previous quarter. So overall, the core provision coverage ratio has also strengthened by 120 basis points on a sequential basis. Back to you.
Thanks a lot for that, Abhishek. Well, we caught up with SBI Chairman Dinesh Kumar Khara earlier today to understand the fine print of their earnings report for the second quarter. Here's what he had to tell us.
We have got visibility of either proposals in pipeline or one which are sanctioned already, awaiting disbursement. So all that is somewhere in the range of about 3.5 trillion plus as far as the corporates are concerned. So I expect that going forward, the kind of availment which has happened from corporates in this quarter will have the visibility of similar availment going forward, because corporates are earlier raising money from overseas markets. Now overseas markets have turned expensive, and with the hedging cost, perhaps it is much cheaper to borrow from India as compared to borrowing overseas. And infrastructure continues to be a major focus area, and apart from that, the renewable energy is another very major area, and the PLI has also started showing good demand. We have got some investments which are likely to be up for redemption in the current year, and it is as high as about more than 3.5 trillion as on 30th September when we have compiled these results, though it is even on the higher side now. So I think we would be in a position to unwind these investments and support the credit growth as and when this kind of a visibility will be there. And apart from that, at a system level also, I think the government, normally we expect that the spending from the government will also go up somewhere towards December, January, and that will also bring in more money into the system, and which will also address the liquidity requirement of the banking system.
Meanwhile, Sanjeev Chadha, the MD and CEO of Bank of Baroda, believes that there is scope for credit costs to reduce further. Take a look.
Credit costs have been trending downwards, and to my mind, there is scope for it to come down further as the residual impact of COVID dissipates. We had guided earlier that credit costs should, for the bank, be between 1.25 and 1.5%, although they are less than 1% this quarter. But there always are uncertainties. So for the moment, we have improved our guidance to between 1 to 1.25%.
Well, the third headline today, Britannia was the star, was up close to 9% after the company posted strong revenues. In the second quarter, the company's market cap crossed 1 lakh crore rupees post its numbers. Manglam is with us to run us through the details. Manglam?
Britannia hit a record high in today's trading session. The company reported its highest ever quarterly revenue. The street rewarded it with the market cap actually crossing that 1 lakh crore mark for the counter as well. That's not all. They've continued to gain market share for 38 quarters in a row, and now their market share is at a near 15-year high, and that basically is at its widest point that we've seen as against its second competitor Parle as well. If you just take a look at the numbers across all parameters, the company reported a comprehensive beat. The volumes were about 4%. That was the only in-line parameter. However, the street was worried about the way the company's debt increased from 700 odd crores to close to around 1700 crores. But to that, the management clarified in the conference call that the debt was taken only to fund capex because it came at attractive rates of 5.8%, which was lower than the treasury yield of the company as well. In fact, in the conference call itself, they spoke a lot more about all the other concerns that Street had, which was one, Bombay Dying SEBI order, which they believe that they have gone ahead and appealed against the court's order. Apart from that, we've also, heard the company talk about raw material prices stabilizing, a large part of their new product business doing extremely well. Croissants, for instance, would do about 150 crores by the end of this year. And Rajneet Kohli, who was hired from Jubilant Foodworks as the CEO and ED, will now operate day-to-day management of the company. So that stock did well on account of that. And while Britannia did well, its holding company BBTC, which holds about 50.5% stake in the company, which is worth around 50,000 crores, did even better in trade today. And that's primarily because of the big holding company discount that it trades at. BBTC's market cap is just around 6,500 crores.
We've taken debt, yes. We've taken debt for our Ranjangaon expansion, which was a lot of that in dairy. The dairy plant is almost ready and should be commercialized soon. So dairy, then we've got a factory coming up in Tamil Nadu, a factory coming up in UP. To fund that, and we've got a loan at a very low price. We've got a loan at 5.8%. We are looking at approximately exit rate of about 150 crores, which is, I would say, a reasonable number for a product which has just been launched. The total NPD contribution, it will probably be about 5%.
Okay, that's about Britannia. It looked very good. But Manglam, you stay with us. Marico was the one that was down more than 5% after it saw tighter margins in the second quarter. A weaker growth outlook as well weighed on sentiment. Manglam, take us through those highlights.
But as far as Marico's numbers are concerned this time around, on a reported basis, they were pretty much in line with what the street was working with. And that's primarily because the company had given their second quarter update as well. However, the management did point out some weaknesses as far as some parts of their portfolio are concerned. For Parachute itself, which is a more mass product, they said that the raw material inflation volatility actually caused them to, take multiple price actions, and as a result of which there was scattered product going into the market, etc. And that hasn't settled, and that has only now settled. As far as the other parts of the business are concerned, we did see some recovery in Saffola. As far as value added is concerned, we did see a bit of a decline out there as well. But the management was pretty confident with regards to the gross margin expansion continuing into the next quarter, and in the next half of this year as well. They're looking at margins between 18 to 19%, notwithstanding the 17% that they've done in the second quarter itself. Importantly, it will be crucial to watch out for how the performance of their growth businesses, foods as well as digital, take the company's growth prospects going forward, primarily because they have tall targets of almost 850 to 1,000 crores coming in from food by FY24 and almost 450 to 500 coming in from their digital and premium personal care. We spoke with the management, and this is what they had to say.
Contrary to expectations, the the commodity market, at least as far as Parachute is concerned, continues to fall in a gradual manner, which means that we were always playing catch up with pricing. As a result, our prices have not been able to stabilize in the market. And as you know, that Parachute is a mass distributed brand, therefore it takes 6 to 8 weeks for the prices to stabilize and the price discovery to happen with the consumers. And therefore, we have not been able to get the volumes back, which I believe now is going to happen come around November, December, certainly around December, because now we see the stability happening.
Well, time to slip into a short break, but you stay with us. We'll be back in a jiffy with the other headlines that we're tracking.